The fast money traders break down the latest earnings from Microsoft and Meta, two of the market's most influential tech giants, with both companies smashing Wall Street expectations. But with sky-high valuations and massive capital spending, can Microsoft and Meta keep up this momentum? Or is a reality check lurking around the corner?
Enjoyed this move in Microsoft, and it's been incredible since April. This is the quarter that you've been waiting for, I think, to take this money off the table.
Yeah, so incredible versus April at the lows. The stock's up 50%. That's not including this gap right here. When you go back to early May when they reported that Q3 result, the stock did have a beat. And when you think about the Azure beat, a couple percent off a 31%, that was last quarter. Now you're talking about more than a 10% beat off of the expectations here. It is pretty astounding. The fact that they're breaking out that Azure number now tells you that they are ready to kind of get at least the leverage on a lot of those investments that they've been making. But I think it's important to note that if you look at the revenue for this quarter and the CapEx that they spent, I think it was about 24, 25, it's still 31% of their revenue, right? And so it either speaks to the fact that they continue to build in a way that they're looking out to the future, or they continue to feel like they are capacity constrained, which I guess, and you've been making this argument, I was just telling you, they're both good scenarios right now. And unless you see some sort of broader slowdown, which I would have expected you see some sort of digestion at some point, because right now, and when I know we're going to talk about Meta, but there's a handful of companies that are really monetizing AI right now, and they happen to be Microsoft and Meta. But to Guy's point, two consecutive now looks like 8% gaps after earnings. This one's different than last quarter, because last quarter the stock was down 15% from those recent highs. Now the stock is literally going into this print up 50% off those lows.
Right. So, I mean, so the underlying business, well, the more historic, productivity business processes, that was also good. This highlight, that was so much better. It's sort of a bigger beat. And for all the points you've been saying, we saw Google Cloud, also very nice growth. Microsoft here, very nice growth. We're going to see Amazon tomorrow. I would suspect same thing. I mean, this is really exciting. This is to the extent that there was this narrative earlier in the year that AI has, not peaked, but it's already pricing in so much more growth. That was, I guess, as you would say, Mark Twain guy.
Yes.
Right?
The rumors of my demise greatly exaggerated. Yes.
This is not slowing. This is an acceleration, and we'll hear exactly. It was Dan quoting me, and you and I talk about this all the time. Delayed? Is it delayed? Is it demand? And right, demand is still there, but supply is not adequate. We'll see. But I mean, there's a lot to like here, and your point about it being already on an uptrend going into this, and yet jumping over the bar.
Can I just be really clear?
Nicely.
You've never wavered on this trade. Not a bit. I mean that. No, in 2 years, you know what I mean? So it's easy to try to poke holes in it, which maybe I have done a little bit. But here you are. Look at this thing. A couple times. It's over $4 trillion. It is literally a monster. And Guy's been saying this for, I think, 3 or 4 years. This is probably one of the, top 2, 3 most important companies in the world. And they're doing it. I mean, listen, the fact that I'm like, yeah, have a ball. And it tells you maybe it's over. I don't know.
Yeah. Yes, I agree with that.
And we will get to the details of Meta, but investors wanted to see justification of the spend. Investors wanted to see confirmation of the story. And here we have it. And feasibly, Michael, this is confirmation of the big cap tech trade here, the Mag 7 trade going strong.
I mean, it's certainly hard to push against that given what we've seen today, given what we saw, last week. To me, it suggests that things are actually still pretty good from a macro environment, right? I mean, these companies are cyclical companies. They used to be asset light. They're not anymore. Now they're asset heavy, right? So this AI spend better pay out, because if it doesn't, it's a big issue. But listen, for now, I think the story's clearly intact, and, it's hard to bet against them. But if growth slows, if inflation is higher than expected, if rates continue to go up, they are long-duration assets. As Guy mentioned, they're richly valued. I'd